Imagine waking up to a world where the US dollar isn't king anymore. Your groceries cost more, gas prices soar, and America's global influence starts to crumble. Sounds like a distant nightmare, right? But it's happening now. The US is drowning in debt, and it's begging allies like Japan to keep it afloat at the cost of their own economies. Japan's had enough, and they're ready to fight back. This is the story of a high-stakes standoff that could change everything. Let's unpack it. America is in deep trouble. With a national debt towering at 122% of GDP, the U.S. is borrowing like there's no tomorrow. Over $3 trillion more in deficits projected in the coming months, according to the Congressional Budget Office. To keep the dollar strong, the U.S. leans hard on foreign allies, especially Japan, to buy its treasury bonds. But here's the kicker. Those allies are starting to pull away. The Bureau of Economic Analysis pegs the U.S. current account deficit at 3.8% of GDP, roughly $1 trillion a year. That's a massive hole that needs constant cash from abroad to stay afloat. But the latest $22 billion 30-year Treasury bond auction in 2025 was a wake-up call. Domestic buyers barely showed up, dropping to just 14% participation, down from a 6-month average of 17%, per the Wall Street Journal. Even worse, foreign central banks are bailing. The New York Fed reports U.S. securities held for foreign banks are at their lowest since 2017. This isn't just a Wall Street problem, it's a Main Street crisis. Foreign buyers hold 30% of the U.S. Treasury market. If they stop buying, the Federal Reserve might have to print more money, igniting inflation that jacks up prices for everything: gas, groceries, your morning coffee. Higher Treasury yields could spike borrowing costs, crushing small businesses and making home loans pricier. The dollar's already taken a 10 to 11% hit in 2025, making imports more expensive and squeezing every American's wallet. But why are allies like Japan turning their backs? It's not just about money, it's about trust. The world's faith in the US dollar as the global reserve currency is fading. Central bank managers, 85% of them, according to surveys, cite U.S. sanctions as a reason to ditch dollar-based assets for alternatives like gold, euros, or even Chinese yuan. This shift, called de-dollarization, isn't a blip. It's a warning that America's global clout is slipping. Now, let's zoom in on Japan, America's longtime ally and one of the biggest buyers of U.S. debt. For years, Japan's been a loyal partner, scooping up treasury bonds to prop up the dollar. But that loyalty's wearing thin. Japan's economy is on shaky ground. GDP shrank 0.7% in Q1 2025, exports dropped 0.6%, and household spending, which fuels over half the economy, is flat, per government data. Then came the gut punch: U.S. tariffs. The 2025 trade policies slapped a 25% tariff on Japanese cars, hammering giants like Toyota, which lost $1.3 billion in April and May alone and now faces a 20% drop in annual earnings. Over 1 trillion yen wiped out. Mazda's in such a panic they delayed their earnings forecast entirely, blaming U.S. trade uncertainty. These aren't just numbers, they're jobs, livelihoods, and Japan's economic backbone taking a beating. Instead of easing up, the U.S. is turning the screws. The Treasury's June 20th, 25 exchange rate report demanded Japan hike interest rates to strengthen the yen, making their exports pricier so U.S. goods can compete. Sounds fair on paper, but it's a death sentence for Japan's fragile economy. With a debt-to-GDP ratio of 236%, the highest in the developed world, according to the IMF, Japan's walking an economic tightrope. The Bank of Japan, BOJ, owns 80% of its government bonds, with a balance sheet at 126% of GDP. Higher rates could trigger a bond market meltdown, crushing the BOJ's holdings and sparking a financial crisis. Deutsche Bank estimates Japan would need a 20 to 25% yen appreciation to meet U.S. demands. That kind of shock would devastate exporters like Toyota, already reeling from tariffs, and could plunge Japan into a recession. The BOJ's governor has warned that household consumption is too weak for aggressive rate hikes. Inflation's above the 2% target, but it's driven by pricier essentials like fuel and food, not robust demand. A stronger yen might lower import costs, but it won't spark spending. It could just make things worse. Japan's not just sitting there taking hits. they're fighting back with a strategy that's turning heads. Instead of caving to U.S. pressure, they're doubling down on the Trans-Pacific Partnership, a 12-country trade bloc they helped save after the U.S. ditched it in 2017. In Q1 2025, Japan's exports to these nations surged, with a 17% jump to the Middle East. New trade deals with the UAE are slashing reliance on the U.S., and car shipments to Mexico and Canada are booming. Japan's sending a clear message. They don't need America as much as America thinks. But here's where it gets wild. Japan holds $1.1 trillion in U.S. Treasury bonds, a financial weapon they're now openly considering using. In May 20th, 25, Japan's finance minister dropped a bombshell. Those bonds are a bargaining chip. If Japan starts selling, U.S. interest rates could skyrocket, the dollar could tank, and Wall Street could spiral into chaos. Remember the Treasury sell-off scare in April 20th, 25? That was a warm-up. Japan's prime minister calls this a fight for national survival, especially with an election looming on July 20th, 2025. They're demanding the U.S. scrap car tariffs or face consequences. The BOJ's playing defense too, keeping interest rates ultra-low to cushion the blow from a weakening yen battered by tariffs. They've intervened in currency markets before, in 2022 and 2024, and they're ready to do it again. Japan's also boosting investments in the U.S. to keep some goodwill, but let's be real. This is about survival. On May 20th, 25 Reuters poll found 68% of Japanese economists urging the BOJ to hold off on rate hikes until U.S. trade policy stabilizes. Behind closed doors, BOJ officials are even considering delaying bond tapering past Q4 2025 to avoid market chaos. Meanwhile, U.S. negotiators are fumbling. Internal disputes among Treasury, Commerce, and trade officials have stalled talks, leaving Japan frustrated and questioning America's reliability. Bloomberg reports that Japanese officials are fed up, saying it's impossible to negotiate when the U.S. keeps shifting its stance. This isn't just a trade spat. It's a fracture in a decades-long alliance. This showdown isn't just about bonds or tariffs. It's about the future of global power. Japan isn't just a trading partner. They're America's biggest foreign investor and a key Pacific ally, especially against China's rise. But the America First push is torching that partnership. Social media is buzzing with Japanese frustration, with some calling for cutting ties entirely. If Japan dumps its $1.1 trillion in treasuries, the fallout could be catastrophic. Higher U.S. interest rates, a weaker dollar, and a hit to America's global influence. The dollar's status as the world's reserve currency hinges on trust, but that trust is eroding. Countries like Japan and China are shifting to gold and other assets, signaling a move away from U.S. dominance. If this continues, America's ability to borrow easily could vanish, leading to higher prices, tighter budgets, and a less dominant U.S. on the world stage. The Treasury sell-off scare in April 20th, 25 showed how fast things can spiral. If Japan pulls the trigger, it could make that look like a minor hiccup. To fix this, the U.S. needs to rein in spending and rebuild trust with allies. But instead, it's doubling down, pressuring Japan to sacrifice its economy while offering little in return. Japan's waking up to a harsh reality. America isn't the reliable partner it once was. With an election on the horizon, Japan's leaders are under pressure to put their nation first, and they've got the financial muscle to do it. This is more than say could change the world overnight. What do you think happens next? Will Japan stand firm, or will the U.S. back down? Drop your thoughts in the comments. Let's talk about it. If this story blew your mind, hit that like button, share it with someone who needs to hear it, and subscribe for more deep dives into the stories shaping our world. The global power shift is happening right now. Stay in the know.